Good evening. Thank you all for coming. We're delighted to have Reid this evening. And Reid, it's wonderful to have you here.
Great to be here.
Blitzscaling. Well, at some point we're going to have to get into what that actually means. But before we do that, in some ways, this is one of my favorite of your books. But it seems to draw a lot on some very formative experiences you've had over the last decade or two. Let's start there for a start. So what are some of the formative experiences that have led you to come to the views that you articulate in this book about scaling companies?
So I was originally going to be an academic. Went to Oxford, studied philosophy. Oxford, your alma mater as well. Then realized I wanted to have a more of a scale impact on people in the world. And by fortunate of having gone to Stanford, I'd known this thing called software entrepreneurship. So my first company, a company called SocialNet, I really learned a lot of the negative lessons. Like, what are the things that don't work? What are the things that you're like, oh, you try that, seemed like a good idea, and you're absent a bunch of ideas. The first one that really started working was PayPal. And when I joined it, when I joined the board, when it was called Confinity, and this is before it got renamed as PayPal. And there were just a fire hose, a tsunami of experiences that were of the, kind of like, you're learning so much that maybe it's like I never learned so much except perhaps between the ages of 2 and 3, and doing all kinds of things that Silicon Valley people are kind of from outside the valley perspective looking like you're crazy, but then you're crazy and you make it happen, so that's fun. And then, of course, later, I co-founded LinkedIn, and I've been an investor in a number of companies that have also done this massive, fast path to global industry transformation.
Well, we're going to need to come back to this because there's some very interesting stories and lessons that seem to have come out of that PayPal era and time. But, you also mentioned founding LinkedIn, of course, and you're well known for that. But you've done lots of other things, too, that have brought you here. I mean, you've been an investor, you've been investing in companies, so you've seen a lot of entrepreneurs. Say more about, again, that experience and what, and some of the things that brought you here from that point of view.
So when we sold PayPal to eBay in 2002, I realized the consumer internet was just actually, in fact, beginning. Most of the Valley had actually thought that it was over. And so not only did I, kind of start formulating and launching the idea for LinkedIn, but I also realized that there was going to be tons of interesting companies and that I should go invest in them. And I never really thought, oh, I'm going to become an investor. It was just kind of wait, the consumer internet's still going to be huge, and most of the people don't seem to be realizing it in kind of summer and fall of 2002. And so, investing in Zynga and Flickr and Last.fm and Facebook and, all of these companies. And part of what happened is there was this wave that we called Web 2.0, which is where the internet started reflecting your real life, your real relationships, the way you navigated. It wasn't cyberspace that you went to, but it was part of the life you were actually living, the work you were actually doing. And all of those companies then hit the kind of maelstrom, the same thing as the first internet boom, of suddenly growing super fast and getting big. And so some of the learnings, as it turned out, the learnings from my own experience at LinkedIn, but also from working with these other founders about what problems they were seeing, what challenges they were encountering, and how they were trying to get their products, their services, to being kind of global companies within the space of a very small n number of years. And maybe the funniest one would be to tell an early LinkedIn story, which is when we launched, and we were among the services using what is known as virality, which is people inviting each other. We thought, well, it's only in English, so we'll put in the, 13 countries that speak English, and that's what we'll be. Well, basically by day 2, we were adding countries every couple of hours because someone was writing in saying, my country's not on your drop-down list, right? And it needs to be there. And so, and it was also a useful education in geography as well.
One of the things I love about this book is you also tell lots of stories, and one of you've clearly have learned a lot also from your friends because there's a whole ecology of friends and networks that you have, and you quote quite a lot of the lessons you've gathered from them. How important was that in kind of forming your view? Just talking to other kind of hardened friends and entrepreneurs and peers. I mean, you've got everything from Bill Gates to Bezos to everybody in here.
Critical in part because each blitzscaling company to some degree has its really own unique set of attributes. The company cultures are somewhat different. The go-to-market strategy is different. Frequently there's twists and innovation in the business models that are different. And so if I had written the view only from here's what we learned, here's what we did at PayPal, then the generalizability of the lessons, the kind of understanding about how this scale path looks like would actually in fact be different. And what's more, of course, is you get these folks that range from, as you mentioned, Bill Gates and Jeff Bezos to like Reid Hastings, Eric Schmidt, Brian Chesky, Marissa Mayer, Diane Green, all of these folks. You say, okay, I learned other additional and here's how we solved this problem, and here's how we looked at this. This is how we cracked this business model problem, or this is the way that we started by working on essentially no customer service and actually got to doing customer service, and what are the sorts of paths to doing that. So I would say it's without all of those conversations, the general framework probably wouldn't be there.
Well, let's get to it. So what is blitzscaling? How would you define it?
So blitzscaling, in its precise definition, is prioritizing speed over efficiency in an environment of uncertainty. And so kind of three important concepts to go together. So one is speed, which is how do you go as fast as possible in order to be the first to scale? Because what we're finding in an increasingly connected global markets, these markets, the properties for the businesses, for the industries, follow what we call Glengarry Glen Ross markets. And it's off the movie. It's first prize Cadillac, second prize steak knife, third prize you're fired. So first to scale really, really matters. And that's the speed. Now, obviously speed's kind of desirable. And if you said, well, I'll go faster versus slower, I'd rather just go faster. But what are the prices you're paying for it? So one major price is in efficiency. So you're spending capital inefficiently, you're hiring inefficiently, you're managing inefficiently. You may not actually really tune what your customer acquisition cost is. There's a bunch of these things that are playing into that. And so there's a variety of inefficiencies that are part of the price that you're spending in order to move fast. And the second is uncertainty, which is you may actually, in fact, traditional kind of business wisdom is, well, you should understand what your total addressable market is. You should understand what your customer acquisition cost is. You should understand what your long-term value of your customers is relative to your customer acquisition cost. You should understand what your unit economics are. Things that you work with when you're working with clients on these things. And actually, most often, most of these blitzscaling companies have at best a vague understanding of these things. They rarely understand what their customer acquisition costs are. They rarely understand what their unit economics are. They may not even really understand what their business model is or what their mature business. They may have some pieces, but they don't really understand what it is that's essentially pulling together. And so that's part of the uncertainty, right? So, but the fact of the matter is, in some of these businesses, the prize of being first to scale means that you're the industry transforming business, and it's worth doing the inefficiencies of spend, and not just financial capital, but also labor capital, and you're doing so with pretty strong uncertainties about what the actual business looks like.
But the way you're describing that, Reid, you make it seem as if it's kind of very unclear. You're kind of moving forward to get to scale very quickly, but at the same time in the book you do talk about a few key innovations that are fundamental to this. That sounded to me, as I read the book, very well thought through. So you talk about, yes, tech innovation, but you also talk about business model innovation. Talk about some of the kind of the core innovations that you think are pretty critical to get right.
Well, so part of the thing is if you work back intellectually and you say the first to scale is the one that's going to define the new industry of the future, kind of how that whether it's logistics or communications or media, it's going to define that. Then the question is, well, what's the minimum set of things that you can do to get to scale? But of course, if you don't ultimately turn into a very valuable business, then that you might collapse. It might be irrelevant. Doesn't matter that you got to scale very quickly. So you want to both get to scale quickly and have those elements. And so the most classic one for internet companies is to go super light on customer service, right? So there's kind of the classic trope of, well, your customers should be delighted by the first experience with you. You should make sure your NPS score is high, a net promoter score for people who don't know what that is. Right. And you should be doing that. And yet the vast majority say we can work out customer service later. Right, like customer service is the kind of thing that it's okay, and we're going to actually have an area of a product where we're trying to go as thin and lightweight as that as possible, because as we're really scaling into markets and acquiring a bunch of customers and operating, we will have customer service be a trailing versus a leading.
Yeah, actually, you tell a great story about that from PayPal days. Did you want to just describe that?
Sure.
That was kind of funny.
So in early PayPal, actually, I'll tell a little bit of kind of funny pivot. So we launched thinking we're going to be mobile payments on a Palm service, sync through email. The eBay sellers start using us. And then we realized that's our primary customer. And as part of that, those being our primary customers, it really started getting adopted within eBay, which meant that we were growing at 2 to 5% compounding per day. Now, our customer service department, as mentioned earlier, was our office manager plus 2 people who were in the back of the office. So what that meant, given the volume of what was going through within kind of the PayPal system, and this was a payment system. This was people buying. They were buying goods, so it was their money, it was the product, and was it being delivered? And it was done through a peer-to-peer network. And that peer-to-peer network essentially, kind of was, had all kinds of unevenness in it. Did the seller actually ship the good? Did they have customer service? Did they get the payment? All these kinds of things. And so the volume of inquiry coming in was such that we had only listed our telephone number in the Palo Alto directory. People were figuring out we're based in Palo Alto. They were dialing the main number, and they were dialing extensions at random, such that 7 days a week, 24 hours a day, you could pick up a desk phone and talk to an angry customer. And so, and the volume of emails was exponentiating in terms of the number of emails that were coming in. So we were exponentiating at the number of emails that we were falling behind. And so, now typically, what you'd think as business wisdom is, oh my God, this is critical. You have to get in touch with this. You have to solve this right away. Otherwise, everyone's going to hate you and everyone's going to stop using you. And what we realized was, if we went into a kind of a retail attempt to just kind of try to hire 2 or 3 more people, to try to just kind of have half the people stop their jobs and start answering, phones and emails, that it wouldn't stop us from ultimately going. It would delay it a couple days, but it wouldn't stop us from going in the hole. That what really mattered was our scale customers, right? And what happens when we get to millions of customers, not the tens of thousands. And so we literally turned off all our desk phones, started using our cell phones for business, and started figuring out how we're going to build a new customer service center, all the while basically going, okay, well, the office manager and 2 people we have customer service, that's it for customer service right now, which led to one of the counterintuitive rules, which is in the book, called Ignore Your Customers.
Well, actually, let's get to that. One of the things that's actually fun about this book is you've got these kind of roughly 8 or 9 things you call the kind of the counterintuitive things, and they sound heretical to me, right? I mean, they're almost like a recipe for chaos. Let's go through some of those. One you just talked about one of them, which is kind of ignore your customers. The other one is embrace the chaos.
Yep. So one of the things that happens generally startups are a little chaotic, but one of the things that happens within these environments is for Blitzscaling is you're frequently trying to double your employee base in 3 months or 6 months or 12 months. And if you're doubling your employee base, the ability to run your organization with the kind of everyone well communicated, roles and responsibilities well divided, managerial chains well understood, sequencing events, that all breaks, right? You do try to get your culture really solid, but you kind of realize, and you're pivoting and changing, so you kind of actually realize that these environments are intensely internally chaotic, and one set of folks may be doing something different from another set of folks. And so part of kind of embracing chaos is to say, we know that, and this gets back to the inefficiency part of Blitzscaling, we know that we're going to be, like, for example, not communicating exactly the right way. We know that we might be behind in how we're organizing desks and so forth. We might be behind all these things. That's okay. It's within parameters. It's not complete chaos, but it's like, fine. We know that these things are going to be falling down and breaking in various ways.
No, but you're making it sound tame. Let me read the audience some of these rules you've got, right? So another one, by the way, is tolerate bad management. Another one is launch a product that embarrasses you, right? We could go on. Let fires burn, right? So this, I mean, same one. But what's the basis of these? What would sound like fairly heretical kind of principles?
Well, remember to again back up from the thing of the Glen Ross market. The first to scale is the one that's going to really win and do everything. So how do you get to scale? And so if you say, well, let's take, for example, tolerate bad management. Classically, managers are trained, as they should be, to say, well, look, have one-on-ones with your employees, establish, kind of progress plans of growth in your career, kind of have the kind of well-understood set of objectives of what you're doing, understand what a promotion path looks like. These kinds of things are part of like good management. Well, usually in a blitzscaling company, you don't have time for any of that. If you're spending time on that, you're not spending time on the speed at which you're getting the overall product or service to scale. And that actually, in fact, your employees' careers are actually going to be much more affected by whether or not you're getting the Cadillac or the steak knives or being fired as a company than it is the exact thing, the position they're going to be in. And so what's key is, and part of the whole point, like, for example, one part of this book is to help the companies that are doing this and to say, look, everyone needs to understand that actually, in fact, we're tolerating bad management. Now, we didn't say tolerate criminal management. So if you have problems with, kind of like sexual harassment in your management culture, that's criminal. That should be stamped out, never allowed, etc. But we never had a one-on-one this year, and we changed your job 4 times, and we never really expressed what the actual target for your job was. That's part of tolerating bad management.
One that I'd like you to talk about, because quite often we think about products and innovation. Talk about the one where you say, ship a product that embarrasses you. And is there an example you have in mind when you think about that one?
Well, this one is probably one of the first of these rules that I came up with. And it was my own personal lessons between SocialNet, my first startup, and LinkedIn, my second startup. And SocialNet, my first startup, where I didn't understand the importance of speed, the importance of getting the market first, having the learning curve in order to make it work. I didn't know any of these things. And so I spent, months with, working on a perfect product to unveil it and so forth. And then realized half of my concept of what a perfect product was wrong. And the other half, which was really important in making it work, I wasn't at market learning from. And so I started saying this thing, which is, if you're not embarrassed by your first product release, you've released too late. And what it is an emphasis on speed. It's an emphasis on learning from your customer. It's an emphasis on learning what are the things that get you to scale. So, because any learnings that I preach to other people, I also, of course, do myself. And so when we launched LinkedIn, LinkedIn's first product was super basic. It was a basic profile, a basic invitation mechanism, a basic search, and the only way you can communicate is through other people. And of course, part of the paradox of this is you say, okay, well, Reid invites in his friend James. Well, no value for either of them. They already know each other. James, invites in his friend Sarah. Well, they all mostly know each other. No value. Right. So you kind of say, well, until you get to 500,000 or 1 million people, then essentially, until you get there, no value in the product. So shouldn't you build some features that are valuable? And so with my co-founders, we had a long exec meeting where we were arguing with this, and they wanted to build this feature called Contact Finder, which is a way that I would broadcast out to my network saying, hey, I'm looking for like a data scientist, or I'm looking for someone who is, an expert in this industry, or I'm looking for someone who would understand, kind of what's going on in this new AI technology and whether or not I should apply it. And then at least they'd see a feature that they'd know they could use, and they could see it being useful. And I said, look, we're going to launch, we're going to follow our principles and this very basic product, and whatever we learn first, that's the next feature we'll build. So that was 2003, May 5th, 2003. To this day, we have not yet built Contact Finder, right? Because what we learned was actually, in fact, there were a whole bunch of other features that were more important in order to do sooner and quicker, and those are the things that have been occupying. So we got into that learning curve and then started unpacking that learning curve in order to get to scale.
You also talk about things that I think you organize them in terms of kind of growth factors and also growth in limiters and inhibitors. And I think in the factors you talk about the importance of market size. Say more about just a couple of the other things you think about when you think about what are the factors that make this possible? So
blitzscaling is not necessarily an easy choice to get into. If you're in a market all by yourself, there's no competitors, generally speaking, better to be efficient, better to allocate capital, better to learn better. You always want to move at some speed, but you'd rather not pay high inefficiency costs, and it's better to be making decisions where you've reduced some of the uncertainty in these things. Like, this is the way that we're going to go to market. This is what our customer acquisition pattern looks like. This is what our customer acquisition cost looks like. And here's the unit economics that sure we'll tune over time, but we have a business model that works for us. So most often you are driven to blitzscaling because of competition. And now in a more global market, there's competition that comes from anywhere. There's a question about the fact that people can jump at that market and possibly make it work. The thing that kind of seared in my brain was in China, which we call the land of blitzscaling, there were 10,000 copies of Groupon, right? That's 10,000 competitors doing this. And so you kind of like, okay, you're driven primarily by competition. There's some other things, like sometimes can you get to scale quickly enough, and sometimes it's, well, the competition isn't there now, but we'll come in and we're getting there early. And so those are the things that do it. Now, that being said, it still may not be wise if for example, you don't have a large market, right? So if you don't have a large total addressable market, if you really don't have any, if you're not tuned on your product market fit, those kinds of things could lead you to say, well, even if I could raise what we call blitz capital, and even I go after it, really all I'm doing is accelerating myself into the side of the wall, right? And going up with a cloud of smoke, is not exactly a good outcome. And trying to blitz scale going up in a cloud of smoke just means a bigger cloud of smoke.
So on the smart, you tell a wonderful story, I think, about this market size point. I think you tell the story of Brian Chesky in Airbnb, and I think you're one of the early investors in that. Tell that story about market size and why that mattered.
So, well, it relates to market size. But so what happened is, Airbnb, like many of these kind of new startups, said, look, we're trying to figure out what this new model is, and we think it can be really big, but we're trying to figure out which are the people who are the right early customers, the travelers, and which are the early hosts, and how do you acquire them, and what's the way you use media in order to do that, and what should be the exact business model for what you're charging for and not charging for, and what are the things that are the accelerants of trust within that. And so you're running all these experiments, and you're doing this, and you're doing it with some care, and you want to make sure you don't get ahead of your skis in terms of you raise your capital. And one of the European blitzscaling outfits called Rocket Internet, whose primary mission back then had been find out which models are really working and build copies of them and go really fast, because they had done that with eBay, with Zalando. They had done that with City Deals, with Groupon. And with City Deals and Groupon, they realized that actually their value could come, and they create a knockoff, they accelerate it, and then they sell it in. And so they allocated $50 million. They said we're present in Europe, and Europe is the big market for Airbnb, and so we're going to come after Airbnb. And they said, but on the other hand, you could just buy us now. And so there was this intense discussion within the Airbnb board meeting. It's like, well, we know that we have this really valuable company, but here these people are already deploying significantly more capital than we've raised in the history of Airbnb, that are in the classic kind of like they're experienced blitzscalers, which is you might pick someone up for an interview, have a 20-minute interview, and then hand them an offer letter that says, you have to sign this right now or you don't get the job, right? As a way of doing it is trying to scale and grow these companies. Matter of fact, Rocket Internet for Your Own Entertainment tends to recruit a lot of McKinsey people into what they do. And so we're like, they're going to come for us. And so what do we do? And maybe this is the better way is just to buy them and make that happen. And as we detail in the book, we said, well, actually, there's some things that are pretty hard and fast rules. There are questions about, what is the cohesion and the health of your culture. And this kind of merger could be really challenging. There's the question about whether or not they actually, in fact, that we already have this network, this marketplace, this network-oriented business, and that actually, in fact, all we really need to do is hit the gas ourselves. And that's what we decided to do.
Right.
And so we then started going through let's pick it up, let's start the acceleration, let's not pay as much attention to tuning our customer acquisition cost, let's just try to get to a certain number of listings, per city, define density, let's look at what the internal metrics are, our travelers who also are hosts, so you have a narrower window, a cycle of moving, and let's pull it together and let's start trying to get in the management, both within Europe and here, that we start growing the size of the company and the footprint of what we're going after.
Right.
And the kind of the fun thing that actually is about this publication of the book, which we open with the Airbnb versus Wimdu story, which is the Rocket Internet clone. And they shut down Wimdu a couple weeks ago, or maybe it was a month or two, but recently. Right. And there's kind of an arc that's the natural arc to this book.
So talk a little bit about the role of the founder or the leader in all of this. Are Blitzscalers kind of born or kind of made? I mean, how, when as an investor, when you look at entrepreneurs coming to you and you see them, do you say, that's a Blitzscaler? That's not. I mean, say more about what the role of the founder and the leader in all of this is.
So the really key thing on Blitzscaling founders, but also entrepreneurs generally, is to be infinite learners. There's a stack of things that can be useful in terms of, do you have some subject matter expertise in the business? Do you have kind of a unique set of assets and position that goes into this? All of those things are useful. So, like, for example, it's very useful that two of the three co-founders of Airbnb have design backgrounds, because the design of the experience, not just the design of the website, but the design of the experience, and that design thinking is helpful in elaborating and building the product. But that being said, the really key thing is that you learn new things quickly, because what happens in blitzscaling is the rules that took you for the first phase of the journey, the first year, the first, kind of like from a family startup to a tribe startup to a village startup to a city startup, and these different levels of order, magnitude,
stages, right.
Like the rules that work there don't actually work here, and that you have to change things around. Like the principle about one of our other counterintuitive rules is hire miss right now versus miss right? And those miss right nows at the tribe stage were different than the miss rights the miss right nows at the village stage. And you're shifting around how you're hiring, how you're onboarding, what does management look like, how you're operating.
And let me press you on that. So do most founders make it all the way through those stages, or are there points in time when founders should let go? I mean, you yourself let go.
Yep.
After founding LinkedIn, and you got Jeff Weiner So talk about what that's like as founders make their way through those stages.
So I think it's both, right? So, with Larry and Sergey, they hired Eric Schmidt for a while. With Jerry Yang and David Filo, they had Tim Kugel. Right. Myself, I hired Jeff Weiner. All of these important companies that went through blitzscaling, that brought in a external CEO. Now, one of the things I wrote an essay about this, that I describe this at is, how do you essentially not just look at it as gray hair and experienced CEO and experienced scaling, all of which can be useful, but actually, in fact, as a co-founder, like the moments of co-founding. You want people who still have that kind of founder energy, the belief that the mission is really important and that you will trade off risks about succeeding in the mission. And so that kind of, there's a whole set of that. But then there's also folks, Jeff Bezos, Mark Zuckerberg, Brian Chesky currently, to whom they go, no, I'm learning this job and I'm learning through each set of skills and I stay as it. So it can be both ways. And the important thing is to recognize for you yourself as a founder making these decisions about, well, which learning path am I on? Because if the learning path is how do I manage and run a larger and larger scale organization, were more of the things that I was doing at the early stage, designing the product or working out, kind of the business model strategy and so forth. My team is doing around me, and I'm hiring and managing the executives and the whole team versus all those other things. So which learning curve are you on?
In many respects, you could say so far what you've been describing, what's in this book, is a very Silicon Valley story. It happens here. It's happened a lot here. Will keep happening here. But could this happen elsewhere? And by elsewhere, I'm thinking, I don't know, other sectors, other parts of the country, other countries, other industries, large companies. Can you blitzscale in a large company?
So, I'll answer two different questions with kind of compact. So one is other industries, other countries. So Zara is one of the companies we describe here, which is fast fashion. Right. And what they did, and there's usually a technology underpinning, so they realized we can use technology for manufacturing within Spain. So it's not like you usually think manufacturing, go to the cheapest location, China, Southeast Asia, et cetera. No, we're doing it within Spain. And we're using technology to transform our sales force into intel gathering. So when you walk into a Zara store, they're like, what are you looking for? What kinds of things do you want? And they're aggregating that information and sending it back as fast as possible through the analysis, design, and manufacture, such that the loop from we're getting a signal that this is the kind of thing that people are looking for to having those kinds of clothes in the store is 6 weeks. And what that means, of course, is it creates this delightful experience for shoppers who are like, well, this is the place where the newest, hottest thing is, and I'm looking for that, and I can simply express what I'm looking for, and I keep coming back to that store, and I can find those things within fast fashion. And so that's an alternative industry, an alternative geographic location. And there is, in fact, blitzscaling in even like, for example,
you said China is the land of blitzscaling.
Exactly.
This was one classic example.
Well, China, it's happening all over the place. But I was mentioning it's like, there's multiple companies in Europe. There's companies in the Midwest. It does happen in other places. It's easier in places like China and Silicon Valley, where the capital allocates, the talent network is there. It's an easier thing, but it can actually, in fact, be anywhere.
Say some more about the capital. You do use this term of blitz capital.
Yes.
That it's one of the ingredients that's actually critical if this is going to happen.
So
what do you mean?
If what you're doing is saying, look, what we're going to do is, down prioritize the exact collection of revenue, the exact business model, profitability, and we're going to up prioritize scaling the business, getting to multiple markets, right, establishing our footprint. Well, you always need a bunch of money for that. And most often, that's through investment. So that's blitz capital. It can be through revenue as well. Like the Google AdWords cycle is through, we've got this AdWords printing press of money, and that allows us to build into this amazing business. But most often when you look at Airbnb, you look at Uber, you look at Facebook, and actually PayPal, you're raising a bunch of money in order to be able to realize that market opportunity.
So we've been talking a lot about what has happened and what's over the last decade or two of blitzscaling and innovation. As you look forward, let's look forward for a second. Are there markets, places, or even technologies that are kind of natural blitzscaling technologies, AI, blockchain? So look forward a little bit. What are you excited about when you think about blitzscaling and technologies?
So the general thought is the closer you are to software, the closer you are to network effects, the closer you are to these things that have a high value at the end result and a fast-moving cycle, the closer you are to where you're really going to likely only win if you're in a blitzscaling game. Because one of the things that ends up happening is if company A is blitzscaling and company B is not, company A may not win, but company B is not going to win, right, is the usual pattern of these things. And so that's why competition drives you into it. And so software patterns that move from, for example, AI is going to transform every industry. We have a set of techniques plus a massive increase in cloud compute plus data, which means that that not just the intelligence which is driving this business, but the very products and services are going to be transformed, right? You can obviously see what's happening with autonomous vehicles that comes out of this AI revolution. There are going to be changes in a whole wide variety of medicine and precision medicine on this. You obviously can imagine what happens when you have a whole bunch of AI tutors, right? The way that all of this gets touched through this kind of the software, the aggregation of data, the compute in the cloud is going to transform a whole bunch of businesses.
Right. Well, since you opened the door, let's go there. Are you excited about AI? What are you excited about with regards to AI? What are you worried about?
So I do think that with the changes that are happening, we can create, like for example, like a canonical one that most people who follow AI know is that, well, you can do melanoma detection with a cell phone camera. And so therefore, all of a sudden, this form of cancer detection is available to any person who has a smartphone. And that allows you to identify things, to possibly seek medical, the transformation and cost in life is huge here. And that's just one of, literally countless applications that can happen. So that's a strong positive. On a worry, is you say, well, obviously we're building a bunch of robots, robot manufacturing, robots driving cars. The speed at which that happens may be transformational of industries in a way that we need to figure out, like, yes, there's this enormous productivity when we move from an agrarian society to an industrial society, but there was also a lot of pain and suffering. And we want to say, okay, how do we help that through with less pain and suffering, more repositioning for work, and what happens in all of this in order to make that happen? So that's kind of in the category of worry. Now, to complete the whole thing, that sometimes when people say, well, okay, what's the most overhyped technology at the moment? Even having said all that, I usually answer AI.
Well, so let's do that. What's most overhyped for you?
Actually, artificial intelligence, I think, despite the fact it's going to be amazing and very large.
What's underhyped?
Underhyped. Well, it could be that what's happening with synthetic biology in terms of what that means for medicine, healthcare, revolution of industries like in agriculture and everything else is actually not being paid as much attention to as it should be.
All right. Well, that was a fun detour.
Yes.
Let's come back to blitzscaling. Talk a little bit about some of what you personally have learned. Give us a couple of examples of what went spectacularly wrong and what went well for you personally.
Well, I'll start with where I really started. I learned a bunch of negative examples from SocialNet. So I learned, don't try to perfect your thing as a genius, that you unveil it and then everyone tells you, oh my God, that's an amazing product, because unless you're Steve Jobs, you tend to be wrong, right? And so learning and getting out there as fast as possible. And also, another thing I did at SocialNet was, as opposed to hiring people who are intense learners and generalists, I didn't say, well, I was looking for someone who has 20 years of experience doing operations management, or 20 years of experience being an engineer.
Right.
And actually, in fact, that learning curve and readjustment is the...
Yeah. Actually, let me pick up on that. I mean, you talk a lot about, throughout the book, about this trait of people who are intense learners. And that's actually a very powerful trait. I mean, you mentioned people like Bill Gates and people who are just incredibly intense learners. Why does that matter? I mean, if it has nothing to do with scaling the business you're trying to scale. I mean,
No, it has a lot to do with that. It doesn't have to a specific thing. The question is usually when you're doing this, you're solving new problems, and you're solving the new problems in also new ways. And so you need to be learning and adjusting that. So frequently, for example, appreciated thing within blitzscaling is the level of, you experiment with a bunch of things and then you kind of 10x down on the things that are working as a way of making that happen. And that can be in what your go-to-market strategy is. It can be on how your product operates. It can be on how you solve a particular problem that you run into. And so, and then as frequently you start as a young mission-driven, idealistic person. Then all of a sudden you're moving, like you only have to double your organization size a couple times before all of a sudden you're well beyond managing the size of organization that you ever managed before. Right? And you're learning that now. And so again, that kind of learning, and you say, well, how do we do communications in our company? And actually, in fact, while there are general patterns where you're moving from where everyone's in a room, and so the communications is everyone stands up, you all talk to each other, to now we have multiple locations across the world. We're figuring out how to make everyone feel like one part of one company, which were the central things we communicate. And while that can different for different companies, we're all solving that same problem.
Well, I'm going to start weaving in some of the questions that have been filtering in from the audience we've got in the room. And there's a set of questions here that are getting at, let me try and paraphrase. How can you be so sure that blitzscaling is the cause of the growth successes you're talking about as opposed to just a symptom of it? And is this an option that's available to everybody? What if I don't have access to the capital? And so say more about, is this an after-the-fact description, or do people actually purposely say that's what they're trying to do?
Well, in answer to the first question, basically you can't get to the scale of customers, revenue, et cetera, without having your organization follow suit. So if you don't figure out a way to kind of onboard a whole bunch of customers, get them integrated and using your service, to get the various service operational things, which includes customer service, but also server operations and all the rest, then you simply don't hit the curve, right. And you don't become the first to scale. So it isn't that I declare that I'm blitzscaling now and now I'm successful. Yes, you have to find the product market fit. You have to work your way into it. You have to change and pivot. Like, for example, PayPal, we thought we were mobile payments, mostly for cell phones. As it turns out, no, we're online payments, and mostly for eBay in the first few years. So you have to recognize that. You have to change that. You have to reorient your organization around it, right. Even though we'd been oriented in a different way. So it isn't, blitzscaling is, in logical terms, necessary, not sufficient in order to get those scales, but it is therefore causal. Now, is it available to everybody? Well, generally speaking, it's very hard to blitzscale without blitz capital. And if you're not in a place where you can raise blitz capital, either from global VCs or in a place that's one of the things that makes Silicon Valley so helpful and why a lot of software entrepreneurs will relocate here, right. Is because there's a talent network and there's the available capital. All of those things are very helpful, but you can do it in other places. But you generally will need the capital. You'll also need to be able to figure out, how do I get as much expertise in a network around the company, both talent that I'm hiring in, but people to help me understand what the race looks like. Like, one of the other underappreciated things about Silicon Valley tends to be that the competition is so fierce here that everyone understands what the benchmarks are. Like, if you're somewhere else, you don't realize how fast people can move, and what are the things that they're doing in order to get to that speed sooner than you and get to that market sooner, and to be learning, from the customers first, right, as a way of operating. And those things are really important to know. Now, you can do that again, Zara in Spain and so on. You can do that, but you need to be getting as much knowledge and expertise and help both in the company and around the company in order to do that.
I think there are a few people who've at least looked at the book, because there's a couple of specific questions that I think draw from the book. One set of questions has to do with the fact that you talk a lot about management innovation. What do you mean by that in the context of blitzscaling?
So management innovation is, what are the ways, and it's a little bit like the tolerate bad management counterintuitive rule that we put before. It's, what are the ways that you think about how you manage your company differently than you might either expect from first principles or from reading a kind of a classic, how to be a good manager business book. Right. And there are questions about, for example, like one of the things when Uber was scaling and say, look, we need to be in multiple cities. This is part of where they were doing blitzscaling well. We need to be in multiple cities. We need to be just deploying there. And so we're going to give a lot of autonomy. And even that they may do things, they may experiment with things that we later go, no, not that. Or they may be experimenting with something that we learn about later and only scale to other regions later. but we're going to allow this kind of like multiple kind of Darwinian evolutionary experiments within cities around promotions, around hiring, around onboarding drivers, and all that thing. Even though you would normally say efficiency, we'll figure out the best, we'll spread it to them, we'll spread it in an efficient way. Like, no, we're going to do all that, and that's going to lead to a certain amount of embracing chaos, chaotic management within the company. And so you innovate on what are the patterns by which you're driving the management and the evolution of management within your company.
And I suppose that also links back to some of the things you talk about in the book about scaling operationally as well, and why that actually matters, and why even automation and other things help. There's a set of questions here that I think are trying to get an understanding of blitzscaling from your vantage point as a venture capitalist. So, asking questions like, do you actually look for blitzscalable businesses and ideas when they're presented to you as an investor? Do you say, okay, that's a blitzscalable business? Do you look at, again, we talked about people earlier, but are there metrics or early indicators that, and do you think most venture capitalists think this way? They may not call it exactly blitzscaling, but do you think most investors are thinking this way when they're picking what they invest in?
Well, so all VCs are looking for businesses that, as mature businesses, have a pretty strong moat around them, are valuable businesses to be long-term shareholders in. And so some of those times, some VCs are looking for things like, well, does it have a deep intellectual property moat, or does it have a unique access to a set of customers, that kind of thing, all of which are totally valid questions. Part of the blitzscaling questions, which are part of this, is to say, well, actually, in fact, is this a potentially huge market where you may say, well, there's only really room for one, or there's room for 1, 2, or 3, like in Glarrick and Ross, but that's it. But the way that you will succeed is that your speed to that scale, right? That isn't like like a classic one on this for both the good and the bad parts is Groupon. Super simple product, right? Pretty well understood in terms of what you're doing. And okay, in order to get to, we have to get to scale quickly in order to be the leader in this market. And by the way, even with the value going up and then down, they're the one that's still around. They're the one that's still operating as a business as part of having been the first mover there, where their other competitors have largely either gone away, been subsumed, been purchased. And so that really, those kinds of things matter. And when you're looking as an investor, what you're looking for is, will this be a long-term, large, valuable business? And part of it is, well, one set of things to understand within blitzscaling is, could this team possibly do it? Is this a market that it should happen in? That this is the way you'll get through the competitors, and this is the way you'll build a valuable business here.
Right. Let's get to some, you might describe as kind of societal and national scale questions. So one potentially, provocative one, but let's start with the other one first. Could you blitzscale a nation in terms of economic growth? Or are these really just applicable principles in the realm of businesses and maybe even sectors? But how would any of this apply to nation building or growing a nation or those kinds of things?
There are times within a government context where you'd say, well, prioritize speed over efficiency in an environment of uncertainty. So like disaster relief would be a classic one. You say, okay, in fact, it's so important to get it back operating that we're going to do a bunch of that. And that would be a more intelligent way of trying to deal with New Orleans or other kinds of areas that you say, okay, this is what we should be doing in Puerto Rico to try to get it, because having it up and running as a healthy economy is more important than efficiency of spend, more important of understanding exactly what's going on. Now, in terms of nation building, I'd have to think about it. I mean, I do think that one of the things about, generally speaking, the platforms that nations do is they generally want stability, predictability, et cetera. They don't want to be operating in kind of high G maneuvers of where crashing into the side of the mountain is a possible outcome, right? So, it makes sense within a business context. It does not make so much sense within a government or nation building context.
Right. Well, the more provocative one is, in your rush to scale and to speed, I mean, you pointed out that, of course, don't do anything criminal, but several people are asking another version of that question, which is, what about unintended consequences when businesses get very, very quickly and maybe you don't think about the societal impacts? impacts in other arena. Politics is the example given in one question. How do we think about that?
So part of why we wrote the book Blitzscaling was to enable more entrepreneurs around the world to say this is how the technology business is the future built. And by the way, more businesses are having technology components. Part of it was also to help refine and learn the practice as we're doing it here in Silicon Valley. And so we have a chapter, Responsible Blitzscaling. And part of it is to think through how, when you're trying to do as speed as fast as possible, because you have global competition, right? Competition from China, competition from other places, that you need to hit that speed clock in order to do it. How do you also try to do this with serious, efforts at responsibility? And so we said, well, there's three types of risk. There is like serious risk threat to individuals. So we also wrote an essay on Theranos as a kind of example of bad blitzscaling techniques, because like medical tests and making decisions about your health is fundamental. You can do deep damage to individuals. Another one is where you damage a lot of people, but the net impact, so you should avoid doing that. And then the third is social, societal risk. You're breaking fundamental infrastructure. Now, risks that are like, oh, well, maybe your business didn't work out and maybe your $100 million or $200 million capital went away. Those are painful, but those aren't any of those kind of three risks. So you sort out which risks you're trying to do. And as part of what we pointed out in Responsible Blitzscaling is, even when you're small, you start thinking about the questions. And then as you begin to scale your organization, become multi-threaded, and this is part of the recommendation for companies that are in this thing, we'll start hiring people whose job it is to really think about these three categories of risk and be proactive on them, so that you're being, as intelligent as you can while you're going through this blitzscaling process.
There are a few questions here, I think, where people are intrigued by you and the things that you've done and maybe trying to get lessons from it. Questions about, how have you scaled your personal leadership and the things that you do? Because you seem to be doing a lot. Somebody actually asked about the trump cards in here, but that you created. But how do you scale the things that you're doing, and are there lessons there for other people?
There's a direct parallel, which is, for individuals, there is, 24 hours a day. Generally speaking, you should be sleeping enough to make good cognitive decisions. So, with Ariana, that puts you at 8 hours. Maybe it's 6 for some people, but you're
some have superpowers around that.
Yeah, some people have superpowers on that. Yes, exactly. And so there's a limit to how much you can scale as individually. You can maybe make decisions on capital at higher amounts of capital, that sort of thing. But it usually comes through organizations. And so what I do in order to do this and scale what I'm doing is I shape and form different organizations to do it. So I, for example, have a writer that I work with. I have a small creative team that I work with on doing a number of projects. And when we came up with doing trumped up cards, which is essentially, and I know the Cards Against Humanity people, so I called them and I said, look, this is the Trump version that you guys aren't going to do. Are you guys cool with me doing it? And they said, yes, just make sure the box isn't black, and so we made it gold. It seemed appropriate. And do this design that way. And so, working as a team, that becomes possible. So a frequent way to think about scaling yourself is, how do you have a team? And so it's one of the reasons why, when professionals get serious, they think, okay, maybe I should hire a coach to help me develop in certain ways. That's forming a team. As you become an executive, you get an assistant, right? That's forming a team. It's just taking those to the next level in terms of team formation is part of what helps you scale.
Right. And along the same lines, talk about also, I know you said, you care about culture, but maybe not as much. There's a set of questions about organizational culture as you're doing all of this. Well, you may not be, people say, yeah, we heard you said don't do one-on-ones or any of that, but how do you keep a cohesive culture as you're going through kind of blitzscaling?
Well, so part of and then we learned this in part from the class when we were talking to Reid Hastings and Eric Schmidt and Brian Chesky and Marissa Meyer, is what we realized is a lot of these companies, while you can say kind of tolerate bad management, you try to set a very strong culture from the early days. And you do that in hiring practice, We actually just released the Masters of Scale podcast with Anil Busri about how he and Dave Duffield interviewed all of the first 500 people in order to make sure that they were kind of cultural fits. And
I think they did the same at Google. I think Larry Page and Sergey in the first.
I think the
couple.
first number, I don't know what the number
Right.
was, but the
Right.
first set.
Right.
So that's one way. Another way, like Reid Hastings, making it explicit, having a cultural deck. Another way is making that a fundamental part of kind of the early kind of the all company meetings, and talking about that in ways that people like where any employee could hold the founders accountable to saying, this is the decision we should be making because this is our culture. And all of those things are really important to put in, because when you start thinking, hey, we're going to get into a blitzscaling fashion where maybe we're doubling our employee base every 3 to 6 months, that can only work if everyone is a culture bearer, right? If you just think it's, we're waiting for the new instruction from on high, that's going to break.
Well, actually, I love one of the stories around culture and also this idea of data-driven decisions, one that you tell about Jeff Bezos. And in fact, I think you say it's something along the lines that where he says, if this is a decision based on opinions, then my opinion wins. However, data beats opinion is a kind of a cultural trait.
Yes, exactly. And part of where I came across that was actually, in fact, that they had been proposing to Jeff that the answering products, like doing kind of essentially wiki and product answering about a product, was something that would be really valuable to add in additional information. And he said, no one's ever going to do that, right? And so, no, you guys have no data in presenting it. It's an opinion. This is my opinion. We're not going to do it. So what the team went out and did was they went out and emailed 1,000 people, collected a little micro database, collected stats around how many people responded, what the information, and brought it back and said, here's our data. We didn't actually build any product. Here's our data about why it is we'll get these response rates. Here's how we ran it. Here's the kind of data we got. And Jeff went, yep, you're right. That will be a useful product. And that product got built.
So as we start to get to close here, I'm just curious, there's again, this sense of what the advice you might give people. So given everything you've learned and know and think about when it comes to blitzscaling, and if you came across kind of a young entrepreneur who's getting started and think that they're in a big market where they could blitzscale, what advice would you have for them?
So, the key thing usually around entrepreneurship is build the strongest possible network around you, right? So it's also hiring in great talent, but it's also getting great advisors, investors who are good partners on this, because usually what you're doing, one of the things I learned from PayPal was you're making a set of decisions that's like driving down a road, but where you're driving, it's where you never fully depress the gas pedal. So where you're making a decision to go left or right, you're going around a corner, you're doing it at this maximum speed. And so in order to do that, you need to be able to make a bunch of decisions very quickly, correct from bad decisions quickly, and kind of figure out which things are actual landmines and which things will explode behind you, right, kind of as you're accelerating. And so, and that kind of thing, it's useful to talk to other people on that. And so that assembly of a network, it's also how you learn, right? Because the faster way you learn is someone says, okay, I've learned this and I've learned to make it explicit. So like, for example, one of the things that I personally interview for when I'm interviewing for people who work with me is, are they explicit learners? Like, not only do they learn, but they learn in a way that they can teach other people. They can talk about it, because that helps an organization scale.
Well, I want to come back to this, advice question with a couple other different groups of people, but triggered by your point about interviews. One of the things that I also found interesting in the book is you say one of the questions you like to ask people when you interview them is tell me something you believe strongly, but that no one else agrees with you or thinks the same way as you. So I'm going to throw that to you. Okay. Tell us something that you believe strongly and that you think most people would disagree with you about.
Well, as you know, but I'll share this with everyone, the general one thing I believe that few of the rest of the billions of people in the world believe is usually a sign of madness or craziness, right? So like that, but what it is focused within audiences, right? So for example, one of the things within an investing audience, when I'm asked that question, I say, well, as a consumer internet investor, my primary focus is, am I investing in one or more of the 7 deadly sins? They think, I'm going to say P&L statement, growth rate, those are valuable and interesting, but it's actually this fundamental tie to universal human psychology that's actually valuable. Another one would be that actually, in fact, I find that my background in philosophy is, I think, more valuable than if I had gone to business school, which I didn't. Because it's, again, formulating the crispness of the investment thesis, being able to run the test against it, and thinking about the possibility of what the new possible businesses are versus here's the set of patterns that have worked. And so those are the kinds of things that are answers to those questions. And usually it's within some kind of domain versus the general overall world.
Let's go back to the advice thing. I mean, we have quite a few students in the room who are hopefully, presumably, going to be entrepreneurs someday. And looking at what, if anything, should they take away from Blitzscaling?
Well, so part of the thing, all business generally ends up in competition. One of the central things in competition is speed. So as one of the things I mentioned also on the Master Scale podcast within Silicon Valley, the notion of OODA loop, fighter pilot terminology, observe, orient, decide, act, is pretty central to how you operate as an individual and as an organization. So the blitzscaling stuff is not necessarily like, oh my gosh, I need to get to blitzscaling. It's great if you found the right business. That business will then utilize these techniques. But what you need to be learning is, look, this is the speed at which things are operating. Like part of the reason why the book is not just written for Silicon Valley people, but the entire world, is to understand, well, do you want to know how technology is going to be changing the world, which innovations are going to stick, which ones are going to define it? More and more of those will come from blitzscaling techniques, so you need to understand that as part of it. You may be doing it yourself. That's great, unfortunate, stressful as all get out, right, in order to do, but it's also the drumbeat that the world is more and more going to.
What advice would you have from blitzscaling for the CEO of a large company that isn't growing very fast?
Well, so basically, since more and more tech companies will be coming out this way, you have to see if they're coming for your product market area, your market. You have to decide, am I going to move and adapt? Like, for example, like IBM, I'm going to shift from a product company to more of a service company. I'm going to shift over here. Are you going to try to buy something and do that yourself? Or are you going to try to change it up and then shift to blitzscaling and take the big risks in it? And public companies can blitzscale, but they need to, generally speaking, have the right faith of the investors. You have to be building up that position where they'd have faith that you could take those risks in doing it. I mean, we see this obviously with Elon Musk, and Tesla. We saw it in many years with Jeff Bezos and Amazon, right? Those are it's possible to do, but the market needs to be backing you in the ways in order to enable that. And so you need to be establishing that relationship with the market as well.
With that, we're going to draw this to a close. Reid, thank you. Please join me in thanking Reid for joining us this evening.